Okay, so we're back on the charts, looking at retirement stocks. This is Johnson & Johnson, one of the sort of favourite dividend stocks. It's an aristocrat, so it's been around for years, paying out increasing dividends. It's a solid stock to have, so pretty much not fail-safe, but as safe as you can get, in my opinion. We have my chart as usual with the two moving averages here. If you haven't seen my charts, you can look at the previous videos if you'd like to, but these two basically show me this black one and the orange one show me the movement of the market. This red line here is just the trend line which I put in. So don't worry yourself too much about this if you're just looking at stocks, but this is how I analyse them. These red lines are where I've entered the market. Now, this is a dividend stock, so it pays out a nice dividend quarterly, and we don't have to worry about when we get into our position, because we're going to be holding some of our position for the long term. So what I'll typically do is I'll enter the market and I will trade half my position and let the other position just run unless I'm unhappy with the price action, etc. However, I'll just without confusing people too much, depending on your experience level and how much you know about trading, but this is actually a very, very simple process I go through, and it's so stress-free, it's unbelievable, because you've got the dividend there always to back you up. So you may not get the best price, but generally you get in at quite a good level, and when you're at those good levels and you're getting paid a dividend, it's win-win. And we're holding these for the long term, these stocks anyway. I'll trade half my position and get in and get out. However, if it goes against what I thought would happen, at the end of the day, I'm holding a fantastic company, massive capitalization, huge history. It's a win-win. Over the long term, these companies are going to do well, or that is the most likely situation. May not do. There may be some drastic change in the markets, and all history will be forgotten. However, we don't know about that, and we can't plan for that. So we just go on the most likely outcome, and that is that over time, long time, these stocks will rise. And they are fantastic dividend payers. So we look at where I've got in here. So the market's obviously at a high here. I would never buy in this range up here. It's far too far out from my averages, so I would not be entering the market on these massive spikes. Which means for the period of 2017, which we're looking at here. So I haven't got the dates. I can't get the setup right. Okay. So. Sorry about that, a few technical issues. Right, so I would never buy in this range. So the range of 2017, which is this entire period here, I was still trading the market. However, I think I only took one trade. I did take one trade in Johnson & Johnson, which was in January of that year. It was down here, this price action here, which is lovely. Very confident in that trade, and I actually came out about here, not just below the highs there. Now, I still have half position on from then. Which is my long-term holding. So I took my profit and I held. Now I just did not like the way it was too far extended. You never know. I mean, these rallies can go on. I just traded other stocks in this case, and I still was in them. I mean, the profit you made, up to here from 147 from where I traded down here. You're looking at a ridiculous gain in your asset. So it's quite amazing actually over time. If you just take the pressure off from your trading, from the way I do it, you've got that backup of the dividend and a fantastic company, and you can trade around it very comfortably. Because at the worst case, if you get it wrong and for some reason you decide to buy on this dip here, I mean, you could do that and still make a nice bit of money. But if you bought on this dip here, say, and then you kept hold of it, and then bang, you get hammered with this. This is, people sell down here as it plummets, especially down, it gets to lows and it keeps on going down. Okay, this exponential crash here gets people in all sorts of troubles because they panic, and it comes right the way down, all the way down to the bottom, and they'll be selling, because they're losing 20% or something on their stock. It's just not the way to think about the markets. As it came down here, obviously I entered the market and it continued going down. Okay, so I lost money, but you look at how much I'm actually losing. You're not losing much, 10% maybe, and it's coming back up. Look where my lines are. They're very, very bullish. Okay, they're all up. Okay, my trend line's there, which goes in from back here, goes up. It touched the trend line, which I re-entered absolutely perfectly. I mean, I'm saying I'm not blowing my own trumpet, but it was nice anyway. Let's put it that way. I don't like trend lines actually. Personally, I just put this one in, and you'll see later on it does help. But I entered the market again anyway, and I actually rode up. I actually came out here on my upper line. I thought it might roll over at this stage. I came out up here for a nice profit. It's crazy actually. I am still holding stock. I start holding stock on all these positions. This one, obviously, I'm negative on half my position. I took profit up here because I did not like this at all. I took a short profit, so I'm actually holding position from up here, which was pretty much I got in too early, and I didn't come out again here. But I closed these other positions off. So basically, I've hedged my trade effectively. But I'm in a position at sort of a higher level, and it's just giving me my dividend play. But I'm still got others that are in well in profit. So you've got to basically take the rough with the smooth on it. Again, I had the option to come out of this on this spike up here on the trade. I actually think I was preoccupied. I don't think I even noticed it. So there we go. But I'm holding a position from up here, and we've got lots of others. So overall, I'm doing very nicely in Johnson & Johnson. It's a fantastic company. I made a lot of money in it, in one stock, just by being patient over the long term. The way the market's looking and the way this chart pattern's looking, we've got what's called a lower high, we've got a double top, and this is coming out of the trend line that I drew. So this is rolling over. When I say rolling over, the line's flattening. So is this one starting to flatten slightly. There's a massive gap between these lines also, which if you go right the way back, you'll see these lines gradually get further and further and further and further apart as they go on up. Now, typically that doesn't go on forever. We can look right the way back in history, and we go back. Look at this. This is what I'm saying about these lines helping you. This is the 2008 crash. Okay, so we've got a lot of just a trading range. See the same setup. We actually got a level here, complete level. Okay, and this is a bit of a bull trap over here. People buying breaks, they buy, and then it plummets. I'd actually argue at September 2008 it wasn't looking too rosy anyway. But if you see that plummet there, we would, and these lines are flat. These are kind of converging as well. If you see the line overall is converging, which means there's more bearish tendency, and it breaks out and then rejects and comes back down through that level, I would not be buying. Let's put it that way. But anyway, especially in that climate at that time, I remember September 2008. I'm showing my age, but never mind. But we are still bullish with the lines being separated. They haven't crossed over to the downside. So when we get a crash like this, and it comes, actually fantastic. It crashes right the way through. If it comes down to this line, I would buy there. Okay, because look at what you've dropped. You've come down from 72 down to at this stage 51. Huge price drop. And yes, it continues further down, but that's just overextending the panic selling, and we've broken levels. We've still not gone through these levels. You just got to have confidence to buy. We're still bullish at the end of the day. What would normally happen is come up, it'll come down, and if these were going to cross, they come down, they'll cross down further over here. But in this situation, they just leveled out again. So here, when you're looking at this kind of situation, here you just do short-term buys, and then when we break like this, that's when you re-enter the market. And it's when it's just broken, we've got a curve and it's expanding all day long. I'm going to be buying these dips all day long. Okay, I've got indicators that I've honed over years of trading, and You get that sort of situation, it's a buy, even though it's outside the lines, like I was saying earlier, because it's just made this move. It's a higher chance of upward momentum. Okay, and it breaks down below, breaks down below, breaks down below, breaks down below. You know, it's just buying. Okay, it's spread over years we're talking about here. Okay, so we're doing from 2008 right the way up to present. But this is only one stock. There's hundreds of stocks, and there's a great deal of good value in dividend stocks. So you can see where I'm going. I just scale into these different companies at different times, and overall you end up with a nice big position size. I think I've been rambling on. I love this stuff. You know, like a lot of other people on YouTube, and you'll find these channels, I absolutely love the trading element to it, and the analysis, you know, the technical analysis of it, but also the fact that you're buying fundamentally solid companies with great dividend payments. It's just a win-win-win, and it takes the day trading stress out of it, because at the worst case scenario you're holding a great company at when the price has pulled back. So yes, it could go a lot further down, but the worst case scenario is I've bought at a better price. Okay, it might have been at a high, but it's off the highs, and it's always off the highs going down, so you're always getting a better price over time, and that's, in the long run, that's just going to play into your hands. You know, there's no guarantees about the future, but if we look at history, you know, it looks pretty good. And you know, you look at Johnson and Johnson here. I'm going back to we're back at 1997. We're still bullish. We're bullish. We've been bullish since. Here we go. So Johnson and Johnson in the 1970s. You look at this. If it loads, it's going a bit slow. I've asked it to do quite a bit of calculation. So looking back to 1970s, it was a bearish. You can see that it was bearish at that stage. So that's fine. We don't mind bearish. That's fine. And if you look over time, from here, you know, it's gone up considerably. And really, you're looking at a turnaround. So if I'll give you an example. This price at $2 in 19. I wish I just started. Yeah. Anyway, so $1 goes down to $1, and then can you imagine? Can you imagine if you've been trading like I'm trading now, or like anyone, any monkey can trade this. Any chimpanzee with a keyboard can trade this stock over 30 years, because you basically just buy it at any time and you're going to be very well off. But anyway, so the chimpanzee holds, you know where I'm going, so it holds, and you've made quite a lot of money. So yeah, we buy the dips, and Johnson & Johnson has been bullish since the 1970s. End of story. Thank you very much. I hope you have a marvellous day. Today is an absolutely gorgeous morning. Sunshine everywhere, a little bit of light cloud cover. However, I'm in a mountainous area. I've got a few mountains around me. Cloud was in the valley. It was fantastic. Life is good. I love this stuff, and I've gone completely off topic, but thank you for watching. Take care of yourselves. Good night.